Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing. So essentially the non-commercials and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment has been rejecting a quite strong historical structure level to the upside. In fact, what we know is that this level was acting as very strong previous resistance. From here, all these previous rejections to the downside were created. Then the market broke above this impulse, above this level with this impulse to the upside. And what we know is that if we have a strong level of resistance, a level which the market has already respected in the past in multiple occasions, and the market breaks above the level with an impulse, at that point, the next natural step would be for the market to go for a retest of that previous resistance, which at that point is turned support, and then for the market to reject it to the upside, which is exactly what happened here. After the market broke it to the upside, the market went for the retest of the previous resistance turned support, and is currently in the process of rejecting this level to the upside, exactly as you would naturally expect in a situation like this. We can also notice, if we look closely at the price action, that at the moment clearly we are in an uptrend. The market has been creating a series of higher highs and higher lows, and the next logical step would be for the market to try to create yet another monthly higher high, so higher than the previous ones, as the market has already printed now a new higher low, which is the definition of an uptrend itself. When you have an uptrend, you expect the market to create a series of higher highs and higher lows. So here in the monthly time frame, everything is quite clear. So let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear as well. We had a very strong move to the upside. Then the market started consolidating, creating essentially this triangle formation in which we had both the creation of lower highs and at the same time also higher lows, which is exactly what that triangle formation is. And right now, we just got the breakout to the upside away from this consolidation area. So the next logical step would be to see more bullish price action being created, which is a quite popular pattern to see basically an impulse, then a consolidation in the form of a triangle formation, and then the next impulse to the upside, which is essentially what the market in this case would be creating. So let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, I did speak about gold quite a few times in the past. I spoke about it when the market was at this level, I explained all the reasons for which after this M pattern, there was a good probability of seeing this rejection to the upside, and that is exactly what the market did. Then after this impulse and correction right here, I explained all the reasons for which from here there was a good probability to see another impulse to the upside. Then again, after this impulse and correction from the previous resistance turn support, I explained all the reasons for which there was a good probability of seeing this potential push higher. And with the very last analysis, I explained all the reasons for which from here there was a good probability of seeing first this retest and then the rejection to the upside, which again is exactly what the market just did. And by the way, I will link in the description all these previous analysis, so you can go and check them out for more free education. But at the moment, what kind of structure we have? Well, before we dig deeper into what we have here from a daily perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing precisely on gold. Now, what we can see here is that with the last reports, net positions have been massively increased. We went from 234.3K all the way up to 300,000 net positions. So institutions have aggressively been moving back to the bullish side for gold, therefore making gold stronger. With 24,000 longs added just with the last report from an institutional perspective, currently bringing the positioning from an institutional perspective to 337,000 longs compared to only 36,000 shorts. So clearly institutions are very bullish on gold, and there is no surprise that the market in the long run has been pushing to the upside quite aggressively. We can see a clear uptrend fueled by this institutional longing. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. You find it linked below. Now, from a daily perspective, what do we have? Now, here on the daily, the price action is quite clear. We have a market which at this level has support. From here, this previous rejection to the upside was created. Again, here the market tested its zone and rejected it to the upside. It seems like the market once again is about to test this very strong daily support and demand area. Now, if that will be the case, there's a good probability at that point to see more institutional longing at this area of gold, further increasing the probabilities of more potential bullish continuation. So if the market will go again for a retest of this support zone, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside away from this area, potentially completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all these general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg, because if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website, which you find also linked in description. Here, you will have the possibility to gain access to all my courses. So really complete courses that will guide you from the very basics of charting all the way up to more advanced concepts like building algorithmic trading strategies using quantitative finance tools like the quant analyzer to build portfolios of strategies, and a lot of really important and really interesting things that you need to know if you want to become a better trader. So this is something you really cannot afford to miss. You also have the possibility to gain access to the trading station software with the Telegram notifications integration, one-on-one mentoring directly with me, the COT data software that you often see me use on the YouTube channel, and you also have the possibility to integrate with gaining access to all my EAs, so my personal EAs, the ones that I have developed and that I trade on my own account, and also to have access to the trading show, which is essentially a live stream of all trades coming from my account directly on the Telegram channel as they are executed and managed. Here on the website, you will see that there is the complete presentation of all the EAs that I personally run. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. And there is also per time slot this special discount. So at the moment, there are 10 days before the next price increase. So I would really suggest that you go and check it out as soon as possible. The link is in description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.